Okay, so breaker goes, if it's a breaker to sell, bearish breaker, it's a higher high. It's the down candle before the up move, because smart money rallies away. Smart money buys in the down candles. You already know this, do you? Smart money buys in these down candles and goes up. I'm just trying to get a gauge on how much you know of ICT. And then, because the stops have run out, when it breaks through this candle, and it returns, it's a breaker, and then it sells off. So, how do you get your directional bias? Do you have a way to get directional bias? Well, I'll give you this template at the end. So I use a 9 and 18 EMA on the daily, and it's heading up, and you can tell it's heading up because the blue's on top of the red. So if we mark that off, well, it's better on the weekly, but if it's turning over, goes to the daily, you know. So like it's up on the weekly, but if you go to the daily, it's actually now heading down. So it's come off an order block, gone into a higher order block as well, and it's coming down, so it's probably going to run stops here. But the 918 EMA is here, and it's going up, and then what you do is drop down to the hour and wait for a retracement. So it's come up, and these are the 9 and 18 EMA on the hour, but these are still the 9 and 18 EMA on the daily. So you know the directional bias is up, because these are these here. I don't know how many videos you've seen of mine already. I've gone through this on my free stuff on YouTube and stuff. So basically, you wait for it to retrace, and it retraces and runs stops. So you can, once it's run stops, it's basically collecting people's stops. When it says run stops, it's like, can you imagine like loads of stops being here, and the market come down, take them out, and collect a lot of liquidity. Basically, take people out. You'll either take people out or induce the sell orders. So then the money then gets transferred from people's accounts to the market, kind of thing. So then it's got enough power to go up, and then it retraces again into fair value. Fair value is halfway between a void, which is a big candle up. So here's a void, and it's halfway there into the void, and then it rallies away. Then consolidates, it goes up, and then it comes back down and takes out all these stops. There. Continues down, and then we're at the end of the uptrend now, and then we're now looking for sells. So then you wait for a retracement up, and then you sell it, wait for a retracement up and sell it. But the thing that I've noticed is I always go from the daily to the hour and then try on the 15-minute. Thing I've noticed is let's clear this chart and go to the daily. Move this line. Is the market. So this is the up candle here. That daily is this on the hour. That's the up day on the daily. So as you can see there, I'm marking off the up day, because then we can go and look for sells with this strategy in mind, or not strategy, but way of reading the market. Sorry about that. Right. So we're here, and basically, once we've ran the previous day's low, it comes back up into an order block. So it's basically one, So the directional bias is on the daily 918 EMA, you already know. And then it's heading down now from this one candle. So we've got 1, breaking market structure, 2, return to previous day's range, 3, into institutional sponsorship. So I'll go through this now. So we've got 1, break previous day's low, 2, into previous day's range, and 3, enter in institutional order block, and then goes down. So that's the sequence. It's 1, 2, 3. 1, break previous day's low. 2, enter the previous day's range into institutional sponsorship. So with that in mind, there's the next day's previous day's low. And then it breaks it, comes off into institutional sponsorship, and then sells off. So it's broken previous day's low. So you wait for it to break the low, and then come back up into institutional, into previous day's range. Sorry, one sec. My wife's messaging me.
By the way, Simon.
Yeah.
Yeah. Is this video being recorded?
Yes, it's for you. Yeah.
Yeah. Good. Yes.
Of course. So that it breaks previous day's low. Yeah, you don't have to take notes or anything. You can take notes in your own time, and better off. Have a call today. That's not a problem. So it breaks previous day's low.
Yeah.
1, move them down again. So 1 comes into previous day's range. 2, 3 into institutional sponsorship. And it keeps doing that. So now we've got to wait for this low to be taken. And it doesn't take it. So you're never in the wrong side of the market. Then you wait for this low to be taken, doesn't take it. Then you gotta wait for it. So this day didn't trade, this day didn't trade. This day, because it's all just a mess, it's all just retail accumulation.
Yeah.
So, I mean, you could see this order block and sell off there without doing this. That's another way, but for now, it's just a way of trying to explain, like, when it breaks previous day's lows. Excuse me. So it breaks previous day's low here, there. So we've got 1 again. We've got 2, return to range, and 3, return to order block. There, and it goes down. And then you can keep doing it. And these lines here are yesterday's low and high. So low here, high here. And I can give you this template and all the indicators and things. So it'll come through yesterday's low and then back into it, into the order block, and then goes down. It's not a very good day to show you live today because it's Friday and it's not a really good trading day.
Yeah.
But you can see it works over and over again.
Yeah.
You go back here, so we can continue. We've got to break the low.
Breaking the low, yeah.
And then it comes up into the order block and down. And then it's the same thing all the time. So we're already in this move, and then we get out at London close there, which is brilliant. Then the next day breaks the low, and then comes back into the buy area, order block, breaks the low, comes into the order block and sells off, and then obviously reverses. So because it's reversed, we've got a breaker. So it goes breaker, reversal, order block, order block, order block, order, breaker, reversal, order block, order block, order block, breaker, reversal all the time. So this is a breaker. So we've had order block, order block, order block, order block, you know, coming down, and then reverses. So with a breaker, you got your breaker here, and I've got to pull up these numbers again. Let me just close this down. So we've got the same thing again. Is 1. 1 is run on stops. 2 is break the order block, and 3 is return to order block and then buy. So then you buy here.
Wow.
So 1, run on stops. 2, break the breaker.
Yeah.
1 on 2, it becomes a breaker.
Yeah.
And then on 3 is enter.
Yeah, return to order block.
Yeah, return to breaker and then buy it so that it comes up to like 100 odd pips. And eventually takes you out because resets. But you'd be out before then because obviously we're intraday traders, so we would catch
That's right.
the
Yeah,
move
yeah.
and stuff like that.
Mm-hmm.
And then got to wait for, so we're in that move from there. And then we've got to wait, if we're selling, we've got to wait for this load to be taken.
Mm-hmm.
It's taken, comes right back up, and then runs stops on the highs now. So it wants to run stops on here. So basically, we go to any pair. What you've got to look for is where is, so from down here, you put a line to here. So you know that stops are riding here. So if you're down here and stops are riding here, that's your target on the weekly.
Mm-hmm.
So get rid of this line. So you look at it from the weekly, and you look at it, it's going up. And then you've got weekly order blocks, which you never really got fulfilled, but still. It's one there. And then, so it's going up on the weekly, and if price is down here and this has not occurred, there's your target. So one, your target, and then, well, yeah. You've got one, your directional bias, and two, your target. So you just put a line there. Then you drop down into your hour. Let's go from, I probably won't even be able to do it. Let's go from, say here. We're heading up on the weekly, and our target is, let me delete this one, it's not confusing. Is there. So we've got going up, and our target's here. You go down to the daily. So we're going up on the daily, but we come back down on the daily because we want to run stops here and here, and that's why the market always comes down to run stops. So once it's, you can always get in on daily breakers when it does this. So you find the higher high, the breaker, you can always sell from there. So it breaks there and then you can sell. Not for long because you know that the target is on the weekly here and you're down here, so you don't sell for long. So if you're going into the hour, where's that line? I won't be able to get to it. Let's go from like here or something. I reset my MC4 and it's not got much data. Okay, let's go. Okay, cool. So we'll buy. It's going down on the daily, so we want to sell here, even though our target's higher. But that's fine. Because the same thing applies, where it breaks previous day's low back into the order block and rallies down. And here it breaks previous day's low back into the order block, and then before it rallies up, you collect like 60 odd pips. So it's going up on, it's going down on the daily. So now we'd be looking for sells, and if it's in consolidation like this, you can always split the markets up into fours equally, but I'm not going to do it equally now. Pretty equal anyway, because I did graphic design, so I can just eyeball it. So we got the equilibrium of the rate of the range, and you've got 1 section, 2 section, 3 section, and 4 section of this entire range, which I've ranged off. So when the market is in, we're looking for sells. So when the market's up here in section 1, we look for sells. That makes sense. So we're looking for sells here, 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 and here. So we can sell it there, 40 odd pips, and then sell it there. We look for 70 odd pips, then we sell it there, and then it continues. And then it continues down.
But where will be your stops there on that range?
You always look for
Is
stops. So from here, you probably get taken out if you look for stops because it rallies before it takes stops here. But
Mhm.
on this one here, the stops are there, always below the lows. And then for this one, your first take profit would be here,
Mhm.
and your second take profit would be equal price swing uh, from equal price swing was there to there,
Yeah.
continued. So it'd be like down here,
Mhm.
like let me just. It would be, see, that's a price swing there. It'd be to there, price equal price swing.
All right.
So we're going up here. Excuse me, and then you got to go into the 30-minute chart so you can see our London and what we're going up or down. Is that right? I haven't got the EMAs on the 30-minute. I'm not on the 15-minute. I have them.
Mhm.
Okay, let's just go to 15 minutes. Reset it. No, I reset this now. Okay, so because I've got my EMAs
Mhm.
there and there, that's the daily EMAs. So
Mhm.
I'm looking for buys. So this is 12 midnight New York. Price goes. I don't bother about Asia really. Just price does whatever it wants to do in Asia.
Mhm.
This is my trading hours here, which is London open. So it rallies above and comes back down into the order block, and also previous days not high but intraday high. So it runs the intraday high
Mhm.
and then comes back down into the order block, and then you buy. So you can also do it with intraday highs, but it's a bit dodgy. Like sometimes it doesn't work. But obviously, if it runs the high here, comes back
Mhm.
down into the order block again, you can buy again. So it's always just running the previous day's low or high, whichever direction you're heading. And
Mhm.
also, so we're selling here, are we? No, we're buying still. This is like a reset. It's not 100%. There's always grey areas in trading, which we all know.
That's correct.
It's actually the wrong way around here, mate, probably. I know we're heading down, aren't we? Yeah. So you go, basically, you try and find a higher
Time frame.
time frame order block and then break it down. So we got an order block there on the 4 hour, but you'd break it down into the hour and you'd find one in the hour to break it down, and you might even find one in the 15 minutes, to break it down. But I can't go into 15 minutes on this chart. You can imagine when you go down, these boxes are going down, so it's 4 hour, 15-minute entry
Mhm.
type of thing. So here, as you can see, it can do three things off the previous day's highs and low. It can bounce off it, like it has here, or it can go through it and come back up. It can go, say, if you want to buy, it can come through it, previous day's high, back on top of it, create a H into an order block, and then rallies away. So it creates a H. So that's 1, 2, and then it can either turtle soup it, so it comes through it and then comes back down. So it can turtle soup and run stops on previous day's high. So there's three things it'll do.
Mm-hmm.
It'll run turtle soup, run previous days high and rally down lower, or it will come up through it, like I was showing you before, but on the
Mm-hmm.
sell side. Comes up, breaks previous day's high, comes back down into the order block, and then rallies away, or just bounce off it perfectly, like it has done here,
Mm-hmm.
even though that's not previous days. It's not previous days, is it? So, yeah, it is. Our previous days is there. So it's not, that's not off previous days, but it does do that sometimes. It comes like, good at, and on the the buy side, it and down the bottom on this one, it can either bounce off it. There's three scenarios basically: bounce off it, go straight through it, return into the order block
Mm-hmm.
to sell off,
Mm-hmm.
or that's it. So if that's on the set, oh yeah, or turtle soup it. So the third option, and then rally away. So if that makes sense. So it goes okay to Y for a sell, or H for a buy, or just bounces off previous day's low and high, or breaks through it and then stops. And it's determined whether there is stops or not to take, or because if there is, the reason why the market's heading up now on the hour is because it's already collected this pool of liquidity under here.
Yeah.
So now it wants to rally away. So now what we look for is it going to stop there, or is it going to stop here? You know, or is it going to stop there? Because there's order blocks to stop. So the rules are: don't anticipate the swing. Don't anticipate the swing. Another important thing to know is
Mm-hmm.
in the daily, as you can see, going up here, we're in an uptrend, and even without the EMAs, if we were selling, it would break there. If we were selling, it would break there. If we were selling, it would break there. If we were selling, it would break there, but it never does. It doesn't
Yeah.
close below it there, and it doesn't close below it there yet. And then it closes below this one here.
Mm-hmm.
So when it closes below here, then it will return to it and becomes an order block and reverses trend. And then as we're going down, it doesn't close above there. It doesn't close above here. It doesn't close above here. It doesn't close above here. It doesn't close above there. And it doesn't close. It closes above there. So now we're in an uptrend. And the reason why we're in an uptrend is to take stops here. So without the EMAs, we can clearly see. So as you're going forward Monday on Great Britain USD, you only look for sells if it breaks there, and you only look for buys if it breaks there,
Mm-hmm.
and being more conservative if it breaks there. So there's a lot of waiting involved. But that's the way you can tell whether it's going to go up or down. So it's broke. Let me clear this chart because it's getting messy. It's broke. This is on the daily.
Yes.
You see, it broke that candle, therefore we're bullish. It broke that candle, therefore we're bullish. It broke. So if it breaks the opposite candle to the trend, then we're heading up. So it breaks that candle, that comes an order block. It goes up. And then it doesn't break the candles down like we showed before. It breaks the high of the day here. So then we're in a bullish market. And then it doesn't close above there, does it? It doesn't close above here, this candle. So therefore, once it closes below this candle, then we're going to sell. Does that make sense?
Yes. Yes.
So
Yeah, basically, we need to wait for the candle to close above
or below previous day's high and low, or the
No. Yeah.
main candle. So if we go to a different chart and not just do this chart, because otherwise you think it might just work for Great Britain USD, but it works on all pairs, all price. Zoom in. So here, like, we're not gonna sell until it closes below one of these, and it doesn't. You know, it keeps on. These are too small to even consider. It's got to close below that one to be a sell, and it doesn't. And then it doesn't close below any of them. As price goes up, there's no close below. There's no close below. There's no close below. There's a close below there. So that's brilliant. So now look, price comes down through this day's low and comes back into previous day's mid-range and then sells off.
Yeah.
That's on. No, that's not even on the daily, but that's on the hour. But it can still happen on the daily because price is fractal. Sorry about that. So if we go to the daily and make it not silly in the hour, but it still works the same thing. So it's got to close below. So from even like, so you can tell like where it's heading because it's not. It's closed above the red candle up. That means we're bullish. Yes. And it's not closing above there. It's not closing below there, so we're not selling. It's not closing. I mean, it closed below there. It did. But if you look there, there's a mitigation block. Yeah, kind of a breaker. Yeah, it's a breaker as well. So, because you got your run-on stops and you get a breaker. So, yeah. So, that's a fake thing. So, look at this. It's just like, it literally just doesn't, they don't get breaking. That's too small to even consider broken. It's not a full shift. It's just a return to order block here. That's where it comes down. So as we're going up, you just wait. You gotta wait for that to break even to consider selling.
Yeah.
Into an order. So the rule is, if there's an opposing order block and it breaks, then you use the order block to buy from, not to sell it. You can sell. You could sell here. A little bit and get 30 pips, but it's not worth it because you counter trend traded. And then breaks that, it's buying. Breaks that, it's buying. If you go to the weekly, we're going to be heading for these highs. So we've still got like 130 pips to go. So what are we going to wait for? It's broke that previous day's high. Sorry, the bearish day's high. And then we mark it off as an order block. So now because it's gone a long wick and come down, go to the hour. What you got to do now is wait for it to react off the order blocks and whether it does or not. It's just to buy it. But if you look here, we've got. I doubt it'll come down to there. Excuse me. I doubt it'll come back down to there. There's always a grey area in trading, but let's see on the 4 hour, it's actually broke it there. So we could be bearish for a bit because it's broke this candle. It could be bearish for a bit until like at least here. Right, let's do it blue. Okay, yeah. So wait for price to come down here on the 4 hour. It's 50 odd pips down. So Monday it could possibly come down to here, and then Tuesday it will like probably break into it and then rally up or something like this. You know, we've got to. I'm not trying to anticipate. I'm not trying to like predict where it's going. I'm trying to like read where the market is going, what it tells me instead of like trying to guess. You got to wait for the market to tell you. If it doesn't tell you anything, then don't trade. One of the most important things as well is if it's going up on the weekly, best thing to do is wait for a down day. Let's clear this chart off. there's loads of information in this right now, but you'll go back and watch the video and insert sections and break it all down. It'll be good for you. Like I just say as much as I can to fill the hour with as much as I can, you know.
Yes, yes.
And then you can go back and listen to it and learn from there. So the weekly's going up, and we're heading for these targets. The weekly's going up from here, but it's going up on the daily before there. So yes, we do want a directional bias on the weekly, but the daily's even better. You get in sooner. So off this breaker. Let me just make it nice. So off this breaker, let's delete this. Yeah, the reason why I do lines is I actually do this. What I do is I go from the weekly. I go to the weekly first, and then I can clearly see that it's come up. So now I'll go to the daily and see where did it come up from. It's come up from this crossover. So now I know that I need to just wait for a down day. So from here on out, and where's my target? My target is this one. So my target's here, the order block. So if my target's there, we've got like, I mean, it's not going to go straight up, excuse me. We've got 400 and odd pips to target, so that's cool. And then the most important thing to wait for, it's hard to do when it's going up on the weekly or the daily, is wait for a down day. So the down day is your trigger, is your alarm. So you've got directional bias is weekly up, daily up, brilliant, number one. Number two, wait for a down day. So the down day appears here. So if we can put a line on that down day and go down to the hour, hopefully we can see it. And we can. So that's great. Excuse me. So now we wait for the down day. We've got the down day here. Brilliant. Now this down day's occurred, you wait. Like once it's going up, you fall in love with down days. You don't even trade them. You just wait for it to go trade a down day. So this is our down day. And then price in the hour comes out of Asia, takes Asia's highs, and drops into New York. And we've got an hourly order block, which would probably break down to 15 minutes, but my price probably won't let me. I'll try. But yeah, we do. That's cool. It'll let me. So we've got, like I said, the Asian session here. And then if we break, we're on the hour before. So you wait for a down day. It's the most important thing, is to wait for a down day.
Yes.
So price rallied away from this here, which becomes a bullish order block because we've got a down day. So here, Asia, then you could, and with it, you could always wait for a break of there, but it'd be a bit late. But still, so you wait for the down day, and then it comes through Asia, and then you wait for it to retrace into the order block and buy. And also, you could always wait for turtle soup, but I would be getting in mid-range of the order block here, and I'll get in here. And then on a 15-minute chart, it's like 6 pip drawdown. I'll have a 20 pip stop loss, 60 pip take profit. So take profit would be around about here. So I'd be taking profits here. That's above the highs here as well. So it's gone in for these highs, and it's gone in for this high here, which you're clearly taking. So that's a market move complete. It's like a market maker sell model. Yeah, buy model, sorry, yeah. So it's consolidated, come down, consolidated, goes up. I know it goes higher than the high, because that's the buy model. So yeah, we're going up still. We've got Asian range, but then we've got to wait for another down day. So that down day is explained. After the down day we trade. So there's another one here Let's move our line to there. So we've got next down day, ding, ding, ding. So we were in from here and we caught like 70 odd pips, brilliant. Caught 70 pips, 80 pips, probably 90 if you held. So then another down day, that's your alarm. You wait, you look for a buy, and you can see we're going down again. But I want to show you that we shouldn't really find a clear entry, so you don't really get phased out by it. There's the down day. Yep, so there's the down day, which we'll mark off. That's your trigger to even look for a buy. And then you see here is twin double equal lows. So we've got to wait for a run on stops. This is why it goes down for this day, because it wants to gun for here. And then once it does, it collects all the money and then goes up. So this is a no trading day really. And then because there's 2 down days now, we then look for a buy on this day, and then look what we've got here. We've got an order block, so then it goes up. So this is what the importance of waiting for a down day shows. It's really important to wait for a down day if you can. On an uptrend, which wait for a down day. On a downtrend, wait for an up day, which we could look into now. So it's not just doing buys all the time. We'll look for sells. Market's coming down on from here on the daily. Then we've got to wait for an up day even to consider selling. So there's our first up day. Break into the hour. So this is our up day. Brilliant. And then we look for a sell, even though there's double up days. So where can we sell from? We look, where can we sell from? So this is what you're asking yourself. There's nowhere to sell from, really, apart from that's been used. So we don't use that one. This one here, order block, doesn't quite get to it. So you see there's nowhere to sell from. There's nowhere to sell from. So you don't sell it. So this is a day you don't buy, you don't sell either. So then you look for a sell after this day now, and it's kind of into the order block, but it's not. But then it doesn't give you time to get in. Only in Asia, but still, it's a good sell day. If you woke up here, it was a breaker entry on London is here. So as you can see, London's here in this little red line. Comes up into a breaker, and then we've got the run on stops. So you're putting all these together now, aren't we? Like we're putting all the tools together to become a consistent trader if we can wait and be disciplined enough to do it.
Yes.
Is this all making sense and clear?
Yes, it's helping me a lot actually.
Good. I don't want to change that. So yeah, 1, 2, 3 again. So I always try and make things 1, 2, 3 because it's easy to remember 3 things more than 4. You know, it's easy to remember 3 things. So we've got 1, run on stops, breaking market structure. Number 2 and 3 is return to the breaker. Return to breaker. So it breaks it, and as soon as it breaks it here, right there, then we look for sells, and then boom, it comes back up, and we can sell it, and it comes down, and it won't go 50%. That's text. That's not 50%. It won't go 50%. Over 60%.
Yeah.
Of the range which it rallied up. So smart money bought in this candle, boom, shot it up, took out all the people who induced all the buy orders here, the marginal order buy orders here because of the breakout traders. It induced all them, and then also took out people who were selling because their stops are riding above this high. But we're ICT students, we wait for the market to create its pattern of a breaker, So rallies up, 1, 2, 3, sell off. And look at your EMAs going down daily. We're in perfect synchronization with the market on the daily. Beautiful. You put your stop 60 or 60% above here, and your entry there 35 pip stop, which is okay on the hour. If you go down to 50 minutes, you can lower that. But I do a 20 pip stop. Even with a 20 pip stop, you can see what I'm taking out. I trade 20. What's your risk reward? What's your profit? What's your stop loss at?
I do the 30 standard stop loss.
Okay, 30 stop loss. And what's your take profit?
Usually it's if I can get one to one or 1 to 2.
Oh, okay, yeah.
Or
That's
maybe
30,
the
60,
previous,
30, 60.
yeah. So maybe the previous high or low. That's my maybe that's my mark.
Yeah, that's cool. I do 20, 60. The reason being is because it's 3 to 1.
Oh yeah.
And out of 3 trades, I can still lose 2 and be in profit.
Yeah.
Which is good because I trade in sets of 3 or 5 or 10. I don't trade in ones. Like I don't have a mentality of I put a trade on. I don't feel bad if I lose that because I trade in a ratio of 3, 5 or 10. Lately, I'm trying to trade in a ratio of 10. And even if I lose 5 if I win 5 out of 10 and lose 5 out of 10, I'm still 200 pips.
Yeah, that's right.
So
that's
why it's really good. Try this 3 to 1. So 20 pip stop loss and 60 pip take profit. And you'll find that if you lose 5 out of 10 trades, you're still 200 pips in profit.
Yeah, correct. Yeah.
So it's a positive risk reward. And then this block is very significant with these and these and these. And then we would reverse. And you see reversal, you got your breaker.
Yes.
Doesn't quite get back down to it, but it's a breaker. Then you got order block, order block, order block. Order block, order block, and then reversal. Order block. Order block. Boom, boom, boom. And the reason why I look for things on the hour is because there's no like noise. There's hardly any noise. Like it's clean. Like on the 15 minutes, it's a mess. Like it goes up, down, and it fakes you out, coming down. It's too messy. Only enter on the 15-minute. Always scout on your hour. But if you don't get a down day, then go on to another pair which has, an uptrend. And if it's a downtrend, and if you've got an up day, look for a sell. You might not find it. If you don't find it, it'll go up another day, and then you look for a sell, and you keep track of the markets, and you're good to go. Consistent. You should become a consistent trader if you can master the disciplinary inner game of patience, discipline, discipline to wait. Yeah. So we've got a break in. So we've got high here, and then that's a breaker. So it breaks it, comes back into it, you can sell it. All the way down here, comes back into it, sell it again. This is where it comes. And once you've got in on the breaker, you got the breaker, and then order block, order block, order block. Moving stuff around now. Order block, even this one. Order block. Even though we're heading down the EMA, so it's going to be sell. And then 40 odd pips, and then again we've got run on stops, low, lower, low, breaker. So as you can see, the market goes breaker, order block, order block, order block, order block, breaker, order block, breaker, and then even though it's like you'd probably get taken out here on the 20 pip stop, you would, but you get in on the next clean order block and then go up. Then this is kind of a run on stops because you can imagine stops being here, getting ran here, and into an order block here as well. So you can either get in off this order block or the break-in market structure here, which is a mitigation right there, and then sell it. And we're still going down. So you wouldn't really buy this with this in mind because your daily's going up, unless you think, okay, it's going for this order block, and you've got to be versatile, and it's going for these stops as well. So from here, you go to the stops, and it's sold 50 odd pips to the stops. That's good.
Yeah.
So the market's always just seek and destroy, as you can see. So it wants to make a range, come up and then take out the range. And then once it's took out the range, it wants to take out this range. And once it's taken out that range, it'll want to take out the previous range in internal liquidity here. So it comes down, and it comes back up and takes. It just wants to take out, like, always. There's always stops. So from up here, there's always stops here. Takes them out. Once it's took them out, it go up into. It's getting messy now, but into that would be like a 4-hour order block, and that's how that comes down. And then here, it breaks the days. You can wait here as well if you wanted to. If you couldn't find entry here, it breaks the previous day's low, then comes back into it, and there'll probably be an order block around about here. Hopefully, let's see. Let me put a line on it so we can see what we're doing. Oh yeah, it's yesterday, so it's quite easy to find. It wasn't an order block. That's okay. It's still into fair value, which is that's a label. Fair value is halfway, so you can sell at the midpoint. So it breaks previous day's low, as I was talking about, comes back into fair value. So either comes into fair value, order block, or a breaker after breaking previous day's high or low. That's the secret source that I was talking about. That one thing. For all the other things around it is like up on the weekly, it's got to be down on the day. Up on the weekly or the daily, it's got to be down on the daily, and then you look for a buy, because what you're waiting for is retracement.
Yeah.
You can always do it like this as well, which I've made a video on. Let's take all this off. If it's going, let's pick another pair like JPY or something. AUD. So we're going down on the daily, and then even on the 4-hour, you could wait for a minor retracement. So retraces, and why does it retrace? It wants to take stops, and then it nearly goes to the order block. Nearly goes to the order block, but it takes stops and then wants to go down. So if it's then you just wait for a retracement again. So it comes down, you don't get in, comes up, retraces. It retraces because it wants to take stops here. Once it's took stops here, you can sell again, and you got a fast run away from the order block, return, sell off. So you see how you can get into these mega moves if you've got the directional bias right with the EMAs, and also with the mindset of it's broke structure here, and it's not breaking the red candles. You get me? So once markets broke this candle here, you can look for buys, but only to here, and then it sells off because the overall bigger picture is it's down, heading down. So with that in mind, what do we do now? So it's live, so let's clear all this off. I'm probably going to use this one and give it to other people as well who in paid membership, because it's quite an in-depth breakdown of everything. Probably the best one so far, which I shouldn't be saying, but they'll get the copy of it, so it's all right. Right, so we've got to wait for a break of that to buy, and we've had a break of that, so we're selling. Does that make sense? So you only look for a buy if it breaks. If you want to be conservative, you only look for a buy if it breaks there, and it'll just break it, probably come back on top of it, create H, and rally off, and then take stops above here, which makes sense.
Yep.
The overall trend of the week wants to go down, and where does it want to go to? It might want to go to there. So it will retrace to there on the daily, maybe as well into the order block, which is nice. Retracement back into the order block.
Yeah.
So this is how we read it. So if it doesn't break there, we're looking for sells. If it breaks there, we're looking for buys.
Yeah. So
that might not be our target. It might be that target there. Well,
so with that one, even if it just a week not closing above that previous daily high, we can still consider buying opportunities, right?
Selling if the EMA is going down. Yeah.
Yeah.
On the so it's probably only coming into there, to be fair, because you break it down now. So it's not clear on the daily. Go down to 4 hour. Oh, that's a significant order block. And then let's see it on the hour. It's still significant on the hour. The same significance.
That's right.
Oh no, it's not. That's wrong. That's the hour one we marked off. So it's either heading to the 4 hour or the hour order block. So what we've got to do now is obviously price markets closing over the weekend, but continuation on Monday. Once it's come off the order block, to be conservative, so it doesn't rally through it, what you can do is wait so it comes into it, and then the candle it comes into it for a sell. I've never even said it this way before. The candle, so it comes up into the order block here. Let's clean all this up and go down to there. Right, so this order block here, pressurize very fast, comes back into it here. You can always sell it here and make 27 pips, but if you did, it's fine, but you'd never get taken out either. So mid-range, try and get in. So the biggest green candle there, you can be conservative, and because sometimes they don't hold and they could rally through, and it really annoys everyone when it rallies through. What you could do is when it's in the order block is wait for this candle to get broken. Once this candle is broken, you can then sell it because it's confirmation that it is an order block. Like this one here, look, this is a ICT order block. Did it hold? No, because what we've got to do is the biggest candle into it there, we have to wait for a break of that for confirmation for it to be a sell order block.
Okay.
So with this candle, with this order block here, it's in the order block. It's lovely. It's looking brilliant. But in order for you to sell it, if you want confirmation, because it could break through into the 4 hour, couldn't it? The 4 hour order block here could break through to that, couldn't it? Possible. You never know. We never know. So we've got to wait for this to break, and if it creates another green candle, wait for it to break, and if it creates another green candle, wait for it to break. So then you're not selling too early. You know, it makes sense, doesn't it?
It is,
I've never really said it. Excuse me. I've never really said it like that before. So on the buy side, it comes down into it. You've got to wait for it to break the candle that it came into it in. So you've got to wait for it to break that in order to buy. So it comes down into it, and then you don't buy it until it breaks that candle. And then you know the market structure shift off this order block, and it's not going to continue down and just take your stop and take out these stops early, because all in all, it's gunning for equal lows, isn't it?
Yes.
So possibly this wouldn't hold, but it did hold, and when it broke that, you know it held, and then once you're in there, you take it like only 18 pips because we're actually heading down, so you wouldn't be buying this, but traditional purposes, forget the EMAs and forget the directional bias. This is the order block, and the way you trade them confirmationally, if that's a word.
Yeah.
You wait for, say, this is the order block here. It could gun through it, and it bloody does most of the time. Like, it's well annoying. But your directional bias is right, it shouldn't. See, for this one here as well, so we've got, let's try and do one which doesn't work. It does actually break it, so it's only 13 pips. But this one here goes into it, then you've got to wait for a break of that there, which is the candle that went into it, in order for it to be a confirmation sell. So when it breaks it here, you can get in straight away because it's already confirmed and it's an order block now because it's broke that candle which it's gone into. So hopefully now we won't be getting taken out by order blocks that work, like that don't work, you know. That's cool. We're all hit by them, you know. And it should rally away fast. Like, it doesn't rally away fast. Like, it's got to rally away fast, like, in order for it to be a confirmation order block. Like here, it spend a lot of time inside of here. Boom, it rallies away fast. So as soon as it breaks the down candle going in, boom, you buy. But if it didn't break that and it meandered round, it dropped, and this wouldn't be an order block. They're held and you'd lose money. For confirmation, wait for when it's a bullish order block, this one, you wait for it to break the down candle into the order block. Straight away, boom, start, buy, sorry. Buy, yeah. And then again, you got an order block, fast move away from it, comes back up into it. Wait for it to break here, and it does. Brilliant. We can sell it. And then if we sell here, let me just do this up. Sell here. It is great. It's on the hour, so it should be at the 15-minute really. You will get taken out, but you can get back in once it returns to it and mitigate your losses. 92 pips. So 20 to 92, 20 to 60, still 40 pips profit if you took 2 trades on this one. But it did one about stops, didn't it? Above here. That's why. And you got this order block here. Wait for it to break this candle. It does, and you sell it. Because it could run right through it. And many times it does. So yeah, that's gone over that a lot. So recap is we're going up. Well, it's not clear. We're going down on the weekly. With that in mind, it's probably done its job here. And it's probably going to reverse now. So in order for you to sell, you'd have to wait for this to break, wouldn't you?
Yeah.
So if this does break, looking for sells. If it doesn't break, look for buys. And it's probably, if it's looking for buys, it'll H on top of it and look for a buy. And if it's selling off, it'll break it and return to it for a Y to take stops below here. So our target 1 from down here is met. You know, this line here is these targets have been taken out. Therefore, why would the price go higher anymore? Because should now stay below the 1288 mark and create a Y and fill in this void and take these stops out. Once it's done that, this could come into play. So from here on out, we've got like 400 odd pips on USD CAD to take, which is nice. So yeah. And Another thing is, before I go, when you're looking at the daily candles on the 15-minute chart, you see Asia, London, New York, London closed. If you go to the 4-hour and imagine looking at these as the daily, if you imagine looking at the 4-hour as the daily, look what you've got. You've got Asia, you've got London, you've got New York, and then it runs stops on previous day's low. But it's not previous day's low because it's in a 4-hour chart. It's probably previous weeks. And it works in fractal. Asia, London, New York. So there's a trade from set up in London, boom, sell it, run stops on previous day's low, boom, try and look for buys now, you know. And then again, we've got Asia, run stops on Asia, even though it's not, and then comes down. So you can have it in your mind that it is the day, but it's not. Does that make sense? You can do that.
Yeah.
So you got Asia, breaks Asia, comes back down, say around about New York open, into an order block on the 4-hour and rallies up, and London closes. It closes off, and it's power of 3, isn't it? Power of 3.
Yeah.
Open, rally, up, close, and then on the 4-hour, and you can treat it like a day, but it's not. But I'm going to have to shoot. I hope this has been informative. My little girl's crying.
It is, yep.
Hope it's been informative, Brian. There will be a recording of this video. I'll send it you in the email.
Good.
Also, if you don't mind, can I put this on YouTube to give to all the other paid members?
Yeah, no worries.
Thank
That's
you.
fine.
It'll also be on YouTube as well, so you can watch it on there. Put it on YouTube.
And also, Simon, do you have a website where I can see other videos?
Only on YouTube. I have a whole YouTube channel. I can send you the link after this video, no problem. And I'll also send you the indicators and template. So you can just pop your template in templates, put your indicators in indicators, use the template straight away, and it'll all come up like this. And then you just format it to your time zone.
Okay. All right. I see. Okay. Well, I think thanks for that. Yeah.
Okay. Well, it's been Simon Davis, Zone Trader. Membership, and thanks very much for your time, and I hope you have a great trading month, week, year. And I've stopped sharing now. Cheers, man.
Okay,
Hope it's been informative. It's probably baffled your brain. There's so much information, but when you go back and watch the video in sections, you'll see that there's tons of stuff to learn and master in there, which will really help you with your trading, hopefully. Has this been useful for you?
It is.
Brilliant. All right, I'll have to shoot because my little daughter's crying. So I'll speak to you soon anyway. But
okay,
it's great to have you aboard the membership, and I'll be doing masterminds with everyone as well, multiple masterminds soon, so you can jump on them, and they'll be recorded as well if you don't get on. So.
Okay. By the way, where can I get those links? Are you going?
I'll send you everything by email. Send me your email. I'll send you everything.
Okay. Yeah. Sure. Well, thanks for that, Simon.
All right. Thanks very much. Take it easy, Brian.
Yeah. Have a good night. Bye. Thanks.